And so it appears that Wells Fargo has successfully executed on a head fake, and not just Wells Fargo, but many, many other big banks, Wall Street banks, and some of these smaller local regional banks and credit unions as well. But number one, first and foremost, Wells Fargo profit rises 32% as higher rates bolster interest income. And this is at a time where we're seeing many large companies releasing their annual letters to shareholders. And ladies and gentlemen, I want to be the first one to tell you that the rich are getting richer. Now, welcome back to the channel. Welcome back to another video, and welcome all new viewers and hopefully new subscribers and returning viewers to Kevin, Kevin, in all caps, youtube.com/@Kevin247. We're talking about money. We're talking about finance. We're talking about passive income. And most importantly, guys, please beware. Avoid the scammers and the spammers and the bots in the comment section down below. They're frauds. They are trying to get you to text them and WhatsApp them to invest money. They want to invest your money. They want to steal your money, basically. And the banks are doing enough of that along with the Fed. We don't need to help any other outside forces do that. Let alone we got, problems of our own here with people leaking classified government documents on the internet. But either way, folks, profit jumped 32% in the first quarter as it earned more from interest rate payments. And this is Wells Fargo, okay? According to this release, April 14th, and they're not going to be the only banks that are seeing these profits, helped by the U.S. Federal Reserve's tighter monetary policy. Now, we've discussed this in the past, but I'm going to go into this in a little bit greater detail in this video. The bank, however, set aside, this is important, this is key, $1.21 billion in the quarter to cover for potential loan losses. Now, this is going to be very, very important because this is compared to a release of $787 million last year. So they're making more money. They're making way more profit, 32% profit jump increase. However, they're also anticipating greater losses, which is why they're setting aside more, $1.21 billion to cover potential loan losses. But overall, even if they were to experience these losses, they would still be in the green, making lots of it. And this ties into their perception of the overall economy and the ability for you and I to continuously make payments, stay gainfully employed, have money available to repay these debts that are only climbing higher, which is allowing these banks like Wells Fargo to turn record profits. The provision included a $643 million rise in the allowance for credit losses, reflecting an increase for commercial real estate loans, primarily office loans, as well as an increase for credit card and auto loans, according to the bank. So, commercial real estate, obviously we have a huge problem there with companies laying off employees, struggling to get employees to come back to the office, and these companies struggling to turn revenue and earn profits. Why? How? Well, we are slowly destroying and deteriorating our entire economy at the expense of you and I, but for the gain and the profit of these banks. Primarily office loans, again, you remember Elon Musk, he couldn't even make the payment on some of his offices for Twitter. And this commercial real estate and this office space is going to go down, especially think about McDonald's. McDonald's telling their employees not to come into work, stay home, work from home, and then laying off these corporate employees. Walmart was laying off corporate employees. Major automotive manufacturers are laying off corporate employees. Google, the list, Meta, the list goes on and on. Layoffs, layoffs, layoffs. So commercial real estate and office loans are going to take a hit. They're going to suffer, okay? And the banks are bracing for that. They're preparing for that, which is what we should be doing as well. When we know that there's going to be a financial hiccup, a financial burden, any financial pain in the future, we need to be bracing for it and preparing for it. And it says, as well as an increase for credit card and auto loans. That goes without saying. As the Fed, Jerome Powell, continuously raises interest rates, it continuously drives up how much credit cards can charge, as their rates are adjustable based on the prime rate and the base rate, and auto loans as well, on top of these cars being more expensive, on top of people losing their jobs, on top of inflation, on top of this being a recession. Banks are building up rainy day funds as fears of an economic slowdown mount from the U.S. Federal Reserve's aggressive interest rates, the hikes to tame inflation, as well as the recent turmoil in the banking sector fueled by the failures of two mid-sized banks. Yeah, the banks know what's happening. But the Fed has also stated previously last year that to try to get inflation under control, we were going to see pain felt by businesses and families and millions of American people losing their jobs and household balance sheets shrinking, and they are holding true to that promise. Comment down below if you've experienced this yourself or you know anyone else who has. And also if you want to find ways of trying to mitigate this damage that's being caused by the Fed, by the banks, in our economy, in our homes. Comment down below if you would like more information on how to try to mitigate these losses, reduce your risk, improve your income earning opportunities, and increase your savings, especially for those on fixed income or retirement or any government stimulus or benefit program, as we know that the costs are going up and the income is going down. And we're literally reading the warning signs of the banks stating that there's going to be massive problems very, very soon, and they are building up their reserves. So if they're building up their rainy day funds as fears of an economic slowdown mount from the U.S. Federal Reserve's aggressive interest rate hikes, as well as a variety of other factors, I feel as though it would only make sense for us to do the same. Don't you agree? Now, we are glad to have been in a strong position to help support the U.S. financial system during the recent events that impacted the banking industry, according to CEO Charlie Scharf in a statement that was released. And the U.S. banking giants were flooded with cash as worried depositors moved their funds from small and regional lenders. The migration has since slowed, but some of these smaller banks may fall into these risk categories, as these smaller banks have loans as well. They have commercial real estate. They have office loans that they owe, and also have extended credit to account holders, customers, businesses, companies, corporations that are quite possibly teetering on the edge of total collapse. Net interest income surged 45% to $13.34 billion in the first quarter. So, I'm sorry, net interest income. How silly of me. Net interest income. Net income is still profit, but we're talking about net interest income. Literally a surge of 45%, $13.34 billion in the first quarter alone, purely on the money that they're making on the money that you're borrowing, that they are already calculating that you won't be able to pay back. They're going to suck all they can out of you through interest with the help of the Fed. They're going to suck all this out of you through interest with the help of the Fed, and then you're going to default. You're going to lose your job. You're going to lose it all. You're going to be broke, poor, homeless, out of a job, just struggling. And then the banks are then, after they've taken it all from you, are going to default and then put you in collections and then file legal proceedings to come after you for the rest. It's crazy. And they're going to come out on top no matter what. Net interest income surged 45% to $13.34 billion in the first quarter alone. That says a lot, folks. This is by far a 10x or more multiple egregious redistribution of a power grab of wealth to take back the little bit that they gave out during the pandemic. Remember the stimulus checks and the PPPs and the EIDLs and all the other CARES Act boosts, PEBT, and any money that came out of Washington, out of the U.S. Treasury. During those times, they are getting it back tenfold. They are widening this wealth gap. And as I told you guys before, the middle class is going to be wiped out as we once knew it, because to be middle class, you're going to have to make a lot of money. So the existing middle class, or the middle class as it was a year or two or three ago, not the same. They are now going to be lower income, and the middle class is changing tremendously. The fourth largest U.S. lender reported a profit of $4.99 billion, which equates to $1.23 per share. And this is compared to $3.79 billion or 91 cents per share a year ago. How many of you watching this video are doing better now this year than you were last year? How many of you are making more money, more profit, saving more money, investing more money, seeing a greater return this year than last year? If you are a high-level C-suite executive for one of these large U.S. lending banks, probably. But ladies and gentlemen, we have some serious work to do here, and I need to tell you about that in just a second. Wells Fargo is also still working to contain the fallout from a scandal over its sales practices that led to hefty fines and an asset cap imposed by the Fed. They got a slap on the wrist, folks. They unethically and illegally wronged their account holders, their customers. They get a slap on the wrist, and we turn around and we see that they're making record profits, record net income on interest alone, building a rainy day fund, bracing for the collapse of not the economy overall, but of the account holders, the customers, the consumers, those that are in debt to these banks. They're bracing for that. They're going to take everything they can from you, and then they're going to wait for you to fall and collapse. And they can do whatever they want. They can do no wrong. They get a slap on the wrist. They get an asset cap imposed by the Fed, and they carry on about their business doing it again. How many people think about it like this? I know people who have actually gotten consecutive speeding tickets in the same day. These are people who don't care. They don't care about the minor infraction and the small price to pay, the fee, the fine, or whatever it may be, and they don't care. Crazy to think, but it happens. I'm sure I'm not the only one. These banks, Wells Fargo in general, specifically is that person that continuously gets speeding tickets because they don't care. They have tons of money. They will pay the fines. They have lawyers, and it doesn't bother them. It's a minor hiccup. It's a minor slowdown on their travels, but then they get right back to it, pedal to the metal, and they know that if they get caught again, they get busted again, it's just going to be a minor fine, a minor infraction. No harm, no foul, really. We have a lot of money. We cannot be stopped. Now, the question is, what do we do? Well, it's very simple, folks. From this point on, if you're listening to the sound of my voice, if you're watching this video, from this point on, we have to get ourselves out of debt, because that is the biggest problem that we are facing right now. I'm not against the banks I'm not against businesses making money, but I am against risk that could potentially wipe out so many families as a result of the Fed continuously raising rates, and they're not going to stop. They're not going to stop. So we have to work hard. We have to prepare. We have to have a plan and a strategy to get out of this debt. Otherwise, I think the writing is on the wall and the future looks grim. And they're already stating their strategy, their plan, their warning that they're building up their reserves, their cash reserves, their rainy day fund on top of these record profits that they're making, because they know that there's going to be a problem and people are not going to be able to pay. So if we know that that's what they're doing, we need to do all we can to make sure that we can pay and we get to a point where we don't have to pay, because we're not leveraging these high interest loans, high interest credit cards, high interest debts that right now is ultimately going to be quite possibly the demise of so many that are trying to get by, struggling to get by, trying to make ends meet and string things along paycheck to paycheck. one paycheck away from being broke, homeless, out on the streets, living in their car, living in their van full time. But at the end of the day, we have to. There are different programs. There are different steps that can be taken. Dave Ramsey's baby steps. We have to get out of debt, okay? We have to. Now, granted, the country as a whole is a completely different story. The national debt continues to rise, and which further adds more uncertainty to the value of the dollar and the future of the dollar and the longevity of the dollar and the continuation of the dollar as it is slowly being dethroned as the world's reserve currency. But the last thing we want to do is find ourselves in a situation where we're in enormous amounts of debt, where the dollar is worth less, our jobs are on the line, we're at great risk, the banks are making profit money hand over fist, and we're sitting here with our hands out begging for scraps. Please, somebody, will you help us?